Welcome, everyone, to this week's Let's Talk About It discussion, where every week we talk about a different topic and how it affects the Black community. This week, we're going to be talking about gold. Um, so, before we start, as always, we're going to do our disclaimer. The information provided in this discussion is strictly for educational purposes only. We strongly encourage you to consult with a licensed financial advisor before making any significant final decisions. Though I do have decades of experience, I am not licensed or registered with any regulatory authority. And next, we are going to, let me get to it. We're going to go with our overview video. And we set this up and be about 6 minutes.
Welcome. In this briefing, we're really going to dig into the investment case for gold, using analysis straight from the closed private investment network. We're going to break down exactly why this ancient metal still plays such a huge role in today's really complex financial world. So let's just jump right in. It's a great question, isn't it? I mean, we live in this world of crypto, of algorithms trading in microseconds, of financial products so complicated you need a PhD to understand them. So why does this simple physical metal, something people have valued for thousands of years, still matter? Well, that's exactly what we're about to find out. Here's our game plan. First, we'll cover what makes gold unique. Then we'll look at its role in a modern portfolio, why it's such a powerful inflation hedge, how to think about how much to own, and finally, a real practical playbook for investing. Let's get to it. Okay, first things first. Before we can even talk about gold as an investment, you have to understand its physical nature. This isn't just some ticker symbol on a screen. Its value comes from something way more fundamental, something real. It really boils down to two incredibly powerful ideas: scarcity and durability. Look, there's only so much of this stuff on the planet. But here's the real kicker. Physical gold is a pure asset. It isn't somebody else's promise or somebody else's debt. That means it has zero credit or default risk. And you just can't say that about almost any other financial asset out there today. And listen, gold's role as money isn't new. It's practically as old as civilization. From the very first coins to anchoring the entire global financial system under the gold standard and later Bretton Woods, it was the foundation. But the moment everything changed, the real pivot point, was 1971. That's the Nixon shock, when the US dollar was cut loose from gold, kicking off this massive global experiment with fiat currencies, the one we're still in. And just look at what's happened since the 2008 crisis. Central banks are buying it up again. That tells you a whole lot right there. So, how does all that history translate into gold's role for you today? Well, in our current world of paper money, its value really stands on three pillars of financial protection. And here are those pillars. First, low correlation. That's just a fancy way of saying when the stock market zigs downwards, gold often zags upwards. It brings balance. Second, it's a crisis ballast. When things get scary, financially or geopolitically, money runs for safety, and that safety is often gold. And finally, think of it as tail risk insurance. It's your protection against those crazy once-in-a-decade type events that can absolutely wipe out a normal portfolio. All right, now for the one everybody's talking about, inflation. We all feel it, right? Every time you go to the grocery store, you can feel your money just not stretching as far. So how does gold actually protect your purchasing power over time?
You know, the secret to understanding gold's performance is all about this one relationship. Let's break down real yields. It's pretty simple. It's the interest you earn on something safe, like a government bond, minus the rate of inflation. So if inflation is higher than the interest rate, your real yield is negative. You are literally losing money, losing purchasing power just by holding that bond. And in those moments, holding gold, an asset that doesn't pay interest but also doesn't get eaten by inflation, suddenly becomes way more attractive and its price tends to go up.
And the proof is in the pudding. I mean, look at this number. Since 1971, since we went off the gold standard, gold's compound annual growth rate has been 8.2%. Now, to put that into perspective, over that entire half century, its returns have not only crushed bonds, but they've actually kept pace with the stock market. It's an incredible long-term preserver of wealth.
Okay, so we've laid out the why. The case is pretty compelling. But that brings us to the next, very logical question. How much should you actually own? Let's walk through a framework for figuring that out.
So, the analysis points to a tiered approach, and it really depends on your goals. A 2 to 5% allocation, think of that as your basic portfolio insurance, a good diversifier. Bumping up to 5 to 8% gives you more meaningful protection against inflation. And that 8 to 10% range, well, that's a more defensive strategy for when you're seeking maximum protection during really uncertain times. All right, we've made it to our final section, and this is where the rubber meets the road. You get the why, you have a sense of how much. Now let's talk about the how, the different ways you can actually get gold exposure in your own portfolio. This chart breaks it down perfectly. You've got physical gold, coins or bars. The pro is you own it outright with zero counterparty risk. The cons, you got to store it, insure it. Then you have gold ETFs, super liquid, low cost, easy to trade, perfect if you're actively managing your portfolio. Then there's mining stocks. These can give you leveraged returns when gold prices go up, but they're much more volatile. And finally, you've got newer digital platforms. They make it easy to own fractional amounts, but you really have to do your homework on who you're dealing with. There's no one right answer here. It's all about what you're trying to achieve. So here it is, the whole game plan boiled down to 4 simple steps. 1. Pick the vehicle that makes sense for you. 2. Dollar cost average. Just invest a steady amount over time. It's the best way to avoid the trap of trying to perfectly time the market. 3. Set your target allocation and be disciplined about sticking to it. And 4, keep an eye on the big picture, things like real interest rates, but don't get spooked into making emotional decisions. You know, this quote from the source material just says it all. The whole point here isn't about getting rich quick. It's about long-term preservation. It's a hedge against the slow, steady erosion of the value of paper money. So let's just quickly recap the big ideas from today. First, gold's value is physical. It's real. It's not just a promise. Second, in a modern portfolio, it's your defensive player, a diversifier, a crisis hedge, and an inflation shield. And finally, a smart strategy is a disciplined one. Set your target, pick your tool, and stick with the plan. And that brings us to our final thought, and it's a big one. As our entire financial system becomes more digital, more abstract, as we move towards things like central bank digital currencies, does that make gold some kind of ancient relic? Or does its timeless, tangible role as the ultimate store of value, the one true anchor in a storm, actually become more critical than ever before? Something to think about. Thanks for joining me.
All right, so let's move directly into this short presentation. We're going to be talking about gold, right? A timeless hedge for today's markets. So what makes gold unique? So in the video, she talked about scarcity and durability. When I was in undergrad taking my econ courses, they taught that the definition of economics is the efficient allocation of scarce resources, and that for something to have economic value, it must be scarce. And gold has been that physical thing that throughout civilization, we as humans have value. And so it's scarce. There's only so much that has been mined and that is mineable at any specific time. It's recognized globally, so it doesn't matter what country that you're in, and it can definitely be a portfolio stabilizer. We're going to get into that a little bit later into the presentation. So gold throughout history, again, ancient times, we go back, thousands of years, and it's been a trade currency across civilizations. The the richest man to have ever lived was Mansa Musa, who was worth close to $500 billion in today's um, value. And when he took his trek to Mecca, he brought tons of gold with him. And along the way, he actually wrecked some local economies because he flooded the market with gold. And so that's the power of gold, and that's how long gold has been used as a currency. So in 1870s, the gold standard was established with major currencies backing their currencies by gold. Um, and then, and it's not listed here, but in the early 30s, when we're dealing with the Great Depression here in the United States, the government, United States government, made the private ownership of gold illegal. At that time, they used to have gold certificates. So instead of having, you know, $1,000 worth of physical gold, the bank would hold your gold and it would give you a gold certificate that you could exchange. And in the 30s, the United States government made the private ownership of physical gold and gold certificates illegal. You had to come and trade it in for dollars, and then it reset the price of those dollars relative to gold. In 1944, after World War II, the international monetary system became anchored to gold, and they chose the US dollar as the international reserve currency. And then in 1971, Nixon took the dollar off the gold standard, and which allowed the dollar and other currencies, because other currencies were now tied to the dollar, to fluctuate and to inflate significantly. And so we look at what gold has done since 2008, since the Great Recession. There has been a steady accumulation of gold by central banks. And that has pushed the price up significantly. So this is a performance snapshot of gold and the price of gold since 1971, when it was, I don't know, it was like $30, $40 per ounce. And since 71, it's gone up an average of 8.2%, which rivals the long-term rate for the stock market, but without the risk and the volatility. And if you look at it since 2000, it has gone straight up from probably a couple $100 to now where it's close to $4,000. And its year-to-date performance for 2025 is 46% as of the end of September. That sounds like a high-flying tech stock, but it's gold. And we'll get into why I believe what are the major reasons for that. So let's talk about the role that gold typically plays in a portfolio. Typically, it has a low correlation to the stock market. And so when the stock market is doing bad, gold typically does good. This year is that exception to where you have both the stock market and the gold market doing well. You have that actual gold market outdoing the S&P 500. You know, gold is at over 40%. The S&P isn't even at 20% year to date. So we're in a very unique time, which is one of the reasons why I wanted to have this conversation about gold, because I think that the price of gold is just going to continue to go up, because I do believe that we are in for some troubling times when it comes to our economy and the dollar. Um, and and so it tends to hold its value or appreciate during financial crises, geopolitical tensions, and currency devaluation, which I think that we are about to see some significant currency devaluation starting with the dollar. And then it's tail risk insurance for those once in a decade events that happens in shocks markets and shocks portfolios that you maybe didn't see coming or weren't prepared for, such as 2008. It's, you can look at it as insurance. And gold's performance this year, not only does it provide insurance, it actually can provide significant returns for your portfolio. And gold is the ultimate hedge against inflation. So the video talked about real yields, and real yields are the no risk return from like T-bills minus the real inflation rate. And so when those real yields are negative, gold holds its value and it typically rises. And that is why it's called the ultimate store of value, because it can keep your purchasing power. And for those that are in retirement or close to retirement, one of the biggest fear is outliving your retirement. And if all of your retirement is in dollars and dollars continue to lose their purchasing power, then you're actually losing money each year. Central bank demand. I can personally attest, starting last summer, when I was involved in the private banking market, that central banks started a huge demand of buying gold everywhere throughout the world. And so they are filling their coffers up with gold in anticipation for some sort of event. So how much should you allocate? There's everybody's situation is different, but there's the conservative approach, 2 to 5% basic portfolio insurance. There's a moderate allocation where you're looking at 5 to 8% for inflation protection while maintaining some growth potential. And then there's the defensive strategy of getting up to 10%, where you're looking at some economic uncertainty and for maximum protection. I would even say in this day and age, until gold pulls back, that there is good evidence to have an even higher allocation, maybe as high as 20 or 25%, especially if you're still looking to grow your portfolio, but you're looking simultaneously for the protection against your portfolio in case we have a shock to the system. So for the last 8 weeks, I've talked about the 7 investment strategies for Black economic power. And we've focused on Bitcoin, real estate, tech stocks, AI, fintech, and those tend to be of higher risk. And so having a good chunk of your portfolio in gold not only helps offset those risks in case there is a shock to the system to where the returns on those investments pull back, but gold is a real asset. And in bad times, gold does well. So I would actually think of having it high as a 25% allocation to gold based on what it's currently doing. So you might say, that's all fine and well, Mike, but how do I invest in gold? So there's different ways. One, you can buy physical gold, right? You can, there are gold brokers where you can buy gold coins, you can buy gold bars. The issue with those is you've got high storage costs. Typically, if you can afford physical gold, you want to have it in a bank vault or a private vault. But then again, it's still not in your direct possession. And I don't recommend anyone having a bunch of gold in their direct possession if they don't have the way of securely storing it. Then there's gold ETFs. And so I've listed the popular ones: GLD, IAU, STOL, and GLDM. These trade like stocks. That's probably one of the easiest and quickest ways to get involved with adding gold to your portfolio. There's also mining stocks. And so kind of like dealing with crypto, where you can invest in the miners, you can invest in actual gold mining stocks. And there's a couple that I've listed here. You get a little bit more leverage to gold prices. You tend to get some dividends, but there's higher volatility. And as always, there's equity risk. And then there's digital platforms such as buying futures. And futures allow you to buy contracts, and you can buy fractional contracts. So you don't have to buy it by the ounce, but you can buy it by the 10th of the ounce using leverage. And so there are different ways to go about owning gold. So, practical playbook. Choose your vehicle. How are you going to own gold? Then you can use dollar cost averaging, where you invest the same amount per period of time, whether it's every pay period, every month, every quarter. Just invest the same amount dollar-wise until you get up to your target allocation, and then monitor and adjust, right? It's not set it and forget it. You always want to be aware of what's going on and why the price of gold is doing what it's doing. So that's the presentation. I told you it's going to be short. This presentation is brought to you, of course, by the Closed Private Investments Network, where we are built on 3 pillars: community of like-minded people who practice cooperative economics. It's not about any one of us maximizing our profit, but it's about us maximizing the benefit of the community that we belong to. The second pillar is education, where we have educational seminars and events like this one every Sunday, as well as financial courses through our Knowledge Center to help you become more financially knowledgeable so that you can make better informed financial decisions. And then the third pillar are investments. We have curated investments that allow you to pool your money together with other like-minded people to invest in private placement opportunities that you may not either be eligible for because you're not an accredited investor, or you may not have the funds to invest in. And so we allow you to invest with as little as $100 in our investment opportunities. And so with that, I have put the link to the Closed Private Investment Network in the chat. It is an invitation-only platform. And so I am inviting you that are not members. But now we get down to the discussion, questions, comments. What do you guys feel about where gold might fit in your portfolio given its historic returns this year and compared to some of the other strategies that we've been talking about over the last few weeks? Anybody? All right.
I would just say the comment I would make in general is I think it's conversations like this that bring value, particularly to those that are on the journey to become financially literate. How often is the average person talking about gold and understanding the value of gold? And the second part of it is with the tokenization of assets. It's be very interesting to see the tools that are going to evolve in DeFi that allow people to actually hold gold to leverage that physical collateral with DeFi tools. So with that said, again, I think this is another example of carving out time on a regular basis to just drop in on these discussions. So I appreciate your consistency and persistence with this.
Thanks, Mark. Go ahead, Leroy.
Thank you for this great presentation. I had the opportunity of walking through a gold mine in Africa and seeing people actually mine it, and it was quite of interest because it was just quite of interest to see it. And I've also passed by lakes that not only had gold but diamonds also, where at night they just brilliantly shine from the lake itself. So this is very interesting. But to hear your presentation in terms of the historical development of well, not of gold, not development, but actually unfolding of gold is quite of interest, and also the government politics as has gotten into it and caused different changes and whatever. But with all that being said, you know, right now when you mention fractionalization, I think it's more like my time, Brother Mike, to begin to look more closely at it. So that's my comment. I think your presentation was excellent.
Thank you. Thank you very much. Go ahead, Joseph.
Good evening. I got here a little bit late because I had a previous engagement, but I am very much aware of the importance of having gold in your portfolio now, because what's going on with this with the economy, they're doing a total economic reset, and they're about to tokenize everything. If you have no real assets like gold, land. Silver is a big one now too, because it has a strategic importance. And here in the United States, apparently the government doesn't feel like it has as much as what it needs. So it's not just a good thing to do, but it's imperative to do it.
Agree, 100%. And we talk about this economic reset that's coming. And the importance of having real assets. And so, and when we're talking about real assets, my top ones are Bitcoin, real estate, and now I have to throw gold into that mix. And because we live in a society that uses fiat currency, and the fiat currency isn't backed by gold anymore. It's backed purely by the belief of the people in the faith of the government to pay its bills. But with the government having the ability to continuing to print and increase the supply of the fiat, it then lowers the purchasing power of the fiat. And so when the purchasing power of the fiat becomes lower, real assets go up in value relative to the fiat. And so that's why we've seen gold skyrocket. That's why we've seen Bitcoin skyrocket. That's why we've seen this shift of institutional investments getting into crypto, getting into Bitcoin, because the writing is on the wall when it comes to the dollar and any other fiat currency. It's also one of the reasons why central banks have been working overtime the last couple of years to accumulate as much gold as possible, which again is shown out in the price of gold going up, over 40% within the first 9 months of this year, which is incredible. And it doesn't seem like it's going to stop anytime soon. I see a couple of new people. Is it Meme Douglas and Harold Douglas? Either one of you guys want to say anything? All right. Comment from Meme. First time joining, looking forward to attending more meetings, get presentation on gold. Thanks for you doing this. Thanks for attending. Again, we're here every week and we choose a different topic and how it impacts the Black community economically. And so let's tie this back to the CPIN. So first and foremost, this is education. This is education for our members, and when they're looking at their investment portfolio, I believe that this is another piece of the portfolio. So this is actually kind of like strategy number 8, right? Gold is more than just a hedge against inflation. It is actually an appreciating asset. And so I believe that you need to look at it in the same way that you look at Bitcoin equity stocks, and real estate. Um, so, um, and then we'll talk at a further time about how we as the Black community can come together and what are some of the strategies that we can put forth to accumulate gold. And a lot of this is going to be tied to investments in Africa. And so when Sally Holmes returns from her trip to Africa at the end of this month, I know that mining operations is going to be one of the things that are featured on her trip. Um, and so we need to be involved in investing in African mines, right? Um, and so, but we need to do it strategically. Um, and so, again, this is really, the eighth strategy for putting together a resilient portfolio and strategies for Black economic power. Any other questions or comments about gold before we end this one short? Go ahead, Leroy.
I just want to say I'm so happy to see my good friend, Brother Harold Douglas, on the call. He and I have been holding meetings like this for the last 30 or so years. And I'm just so happy to have him on the call. So thank you, Brother Harold.
Yes, thank you, Harold, for being here. Looking forward to having you attend more of our Let's Talk About It discussions. And don't forget to become a member of the CPIN. The link is in the chat. Go ahead, Joseph.
Okay, there's another thing you just mentioned, Miss Sally. She's in Africa now.
She's going to Africa at the end of the month.
Okay, is she online? Is she in the discussion now?
No, she's not in this discussion
Yeah,
this Sunday. She was in it last Sunday, and she's here usually, but not tonight.
right. Last Sunday, she said something about trying to get her citizenship in Burkina Faso through the ADDI. That has changed. Um, the the not the president, but the other parts of the government have actually decided that they're not just offering citizenship to Burkina Faso anymore through the ADDI. This is just something that's occurred in this last, I guess, 10 days or so. So they have a lot of other concerns, and their General Assembly, the other politicians decided that they're not offering that anymore. So they still you can still go there and get residency. You can still go there and invest in the economy, but as far as getting citizenship through ADDI, that's no longer being offered. Not there anyway. And then the other thing is that a lot of the governments in Africa have started taking control of their gold mines
Right.
and kicking out these foreign European colonial what do they call them colonizers,
Yeah,
making
colonizers.
them pay um, prices for the pay more fair prices for the gold that they're extracting and taking back a lot of the gold that these companies have been basically looting their countries for. They've actually arrested some of the heads of these companies because they refuse to return the gold, give back some of the gold that they've stolen, and they're not going to let them free until they return the gold that they've looted. So there's a lot going on in Africa right now. I try to keep my ear to the door about the things that happen and that are taking place over there because I have an interest in going there myself. But I don't personally, I don't want to go there to live, but I'd like to do business there. I'm really too old to be uprooting myself, and I've set myself up pretty well here, but there are opportunities there, and I would like to get involved, not necessarily to enrich myself, but to help them grow their economies and to help them advancing into the future, because this new economic reset is going a lot deeper than most people know. And even Bitcoin, I mean, that was a good opportunity before, but it's iffy whether or not they're going to continue to value it as much, because they say it's a store of value, but it really isn't, and it has no utility. And they're kind of migrating toward cryptocurrencies that have a utility, that actually have some use. So Bitcoin is not as favored as it used to be under some, well, according to some of the holders and some investors. But then on the other side of that, there's so much money already invested into it that a lot of people are not going to let it go. So we have to watch and see what happens with that. So if you want to make the most out of your investments, you might want to start looking into some of these stable coins and some of the um, the coins that have utility, as far as being able to move large amounts of money internationally quickly and for very small fees. Because Ethereum is another one of those coins that on that Ethereum network, it does, you can put smart contracts on there, which are, you make an agreement, you set that all up, and once all of the stipulations are completed in the contracts, it automatically just pays what it's supposed to pay. But it's also slow and very expensive. And that's the reason why Bitcoin doesn't have a utility. It's slow. It has no utility whatsoever, and it's very, very expensive. So you might want to be looking into things like, say, the Ripple network and their coin, and Soldano, some of those other coins, Hatera. Some people say Hetera. Those are the up and coming, and right now most of those are pretty inexpensive.
Yeah.
But
So I am going to do a discussion on cryptocurrencies beyond Bitcoin, because the field is changing really on a daily basis, and I'm not exaggerating. Um, I'm plugged into that. Um, I receive information on a daily basis from various sources about different projects. I look at different statistics, different metrics that gauge the um, the health of certain parts of the crypto industry. So I will be doing a discussion about that so that we can get into it and get beyond Bitcoin. It's kind of like, stock picking. Um, and the Magnificent Seven have been carrying, the bulk of the gains here for the last couple of years. But there are some other stars that are coming out. So, but I do want to thank you for the information about the citizenship. I know there was a meeting yesterday morning for talk about citizenship in ADBI. I wasn't able to attend, so I don't know what the results were, but I will also confirm with Sally if she's still planning to go on her trip. Mark, you had your hand up.
Yeah, I want to piggyback on Joseph's comment, add some perspective on the whole crypto and Africa. So Bitcoin utility is that it's the apex proof of case of the blockchain technology. All of the blockchain technology is feasible because of Bitcoin's existence. So it will always be a store of value in a sense, but to your point, it's not the place if you're looking to participate in the growth of the space. So you're accurate on that as well. In that if you want to grow money, if you're looking for above average returns, then it's understanding it's understanding the way I explain it to people. You got blockchain, you got Bitcoin, you got cryptocurrency. And cryptocurrency, the key there is understanding the utility, the use case for the network, and the utility of the coin. With regards to Africa, it's interesting that Gary Vee, some of you may not be aware of him. He is a social media personality who's a subject matter expert in social marketing, social media, social marketing. He's called many trends over the past now almost 2 decades. So his 2026 list, top 5, Africa was number 4, particularly due to the young demographic and the massive size. And it's interesting, Mike, he pointed out that the continent is misrepresented on maps, and it's way bigger than what people actually grasp. So with that, as much as I am a fan and want to see the growth of the diaspora and the growth of the continent, I'm not abandoning these kids who have been born in shit. So my focus is figuring out how to be that bridge where economic activity stimulates both what's taking place here, and we can make an impact on these young kids, as well as participate in what's going on in the diaspora on the continent of Africa. And I believe in a project, Backboard Basketball League, which has a strong blockchain cryptocurrency play, will help us do that. So Africa, and I say that last point just to say, globally, Africa's in the crosshairs. It's in the crosshairs of business, commerce, and the commercial future, economic future. So it makes sense to figure out how to play over there and do business globally because the opportunity is there. So I'll land the plane on that.
Yeah, and here I'll just give my perspective on the correlation between the African diaspora and Africa, the motherland. And so if you go into my LinkedIn, you'll see me say that I am unapologetically pro-Black. I am a Black nationalist and a Pan-Africanist, and I'm a MAGA fan. Make Africa great again. I am of the belief that we as African Americans are the tip of the spear when it comes to the African diaspora. We have the money, we have the technology, we have the education, we have the experience. And so my goal and the goal of my holding company, Temple Rose Holding, is to become the Black version of BlackRock, the largest asset manager in the world, but to be that specifically for African Americans and to refocus the $1.5 trillion of spending power that we here have on an annual basis so that we can reinvest it to support the Black community in the United States to become self-sufficient, self-reliant, and self-determinant, right? We need to take care of home first. But my ultimate goal is a transfer of wealth, to take the Black wealth that we build here in the United States and to move it along with those that want to go to Africa, because that is where, from my perspective, our home is, and that is also where we have the greatest opportunity. You know, Africa is the second largest continent. It is 3 times the size of the United States. It has, if not a billion people, close to a billion people throughout all of its countries.
1.4 billion
And on the continent or throughout.
on the continent of Africa, 1.4 billion.
Okay. And the majority of the population is young, and so it's got the highest growth rate from as far as population, and so we as African Americans and the 50 to 60 million of us, we are that tip of that spear. But we've got to get our house in order. But we should be the ones funding the development projects in Africa. We should be the ones funding the mining operations, funding the manufacturing plants, the whole 9 yards. And so and the technology is now there where we can do our transfer of wealth outside of the fiat system. So that's my ultimate goal. Take care of home first, and then shift resources to Africa in order to make Africa great again. Because Africa has always been great throughout history, the same way that China has always been great. And so we see what the Chinese are doing because they're one culture, and so they're single focused, right? And I believe that the time is here to where we need to be, as members of the African diaspora, we also need to be single focused. But as African Americans, we are the tip of the spear.
There's another aspect that nobody's really mentioning either, about this Russian Ukraine thing. This all plays into this whole economic deal, and because of what we've been getting through the media we're thinking that it's one thing when it's actually something else. As a country, Russia has more wealth than any other country um, on this planet as a country, and the Europeans want it. This is that there are actually a lot of individuals that are involved in the EU that really want to go to war with Russia, and they think that they can win it this time. And when they win, if they win that war, they'll win all of the resources that are in Russia as well. And that's what that whole war is about. So I know we've been given the the story that Putin was the aggressor and all of this other stuff. They've demonized him. They've demonized the Russians in general for what they're doing in Ukraine. But there are a lot of other moving parts going on under the hood that we don't know a whole lot about. And well, Trump understands part of that. He doesn't want to get America involved in that. But at the same time, he wants to be he wants the US to remain the dominant power in the world at the same time. So there are a lot of moving parts. There may or may not be a war in Europe, between Europe and Russia and all, but all of that's going to affect us economically. And I think a lot of the African countries that are aligning with Putin right now are doing that because they see the EU as a common enemy. And there's nothing that brings people together like the perception of a common enemy. So we're going to have to keep our eyes on that and see how that plays out too, because it's going to matter about how you place your investments.
Yeah, and we always have to be aware of the geopolitics. Um, we are shown a certain lens through the American media because of who it's controlled by and what they want us to believe. And so it is very important to, get as many different perspectives as possible and to understand that this is a game of chess, not checkers. Leroy, go ahead.
Yeah, this is my final comment. I want to applaud you, Michael, for the comment that you made in terms of your vision and what you see as far as the diaspora and Africa. And I would encourage you to say that more often on the call in terms of your vision, because that sort of brings things back. I'm a little different from I really want to go to Africa. I want to live in Africa, but I want to live with some people here who want to go there, and we'll already have our community. And at the same time, we're doing what we need to do. And of course, when I went before, I was going alone. So I like your vision, and I would encourage you to keep that right at the center point, just as you do the disclaimer. Keep that at the focus because it really, really resonated with me very well.
Thank you. Thank you very much. I will definitely keep that in mind. So we've come to the top of the hour. Uh, I want to thank everybody for attending this week's discussion of Let's Talk About It. We're here every Sunday, 5 p.m. on the West Coast, 8 p.m. on the East Coast, brought to you by the Closed Private Investment Network. The link is in the chat. If you're not a member, I strongly encourage you to join. We're going to be rolling out some new features, and as always, um, come back next Sunday, bring at least one person, um, and stay blessed, stay safe.